traders. This is Jack with the Trading Tribe. Excited to be back at it again with another trading video today. And today's a fun one. Today's going through really something I haven't done much of in the past, and I think it's part of just my growth as a trader. And it's something that I am starting to do more of, especially with the futures market. And it is going to be how to trade pre-market and a few different things to just consider and remember when you do end up trading pre-market for futures or for stocks and ETFs in the different markets that you end up trading. And the reason I wanted to make kind of a dedicated video here is because pre-market is quite a bit different than actually in the session, or in the New York session we like to call it. And we'll take a look today at natural gas because I actually traded it pre-market, and I want to kind of show kind of what that can actually look like and just certain things to be careful of when you actually end up taking trades pre-market. If this video is valuable, please like and subscribe to the channel for a lot more content like this. I really hope it's worth watching, and I really hope this helps those beginner traders out there. One thing just to get started here, and I have a couple videos breaking down futures trading specifically, but futures are pretty much open 24/7 or 24 hours a day for the 5 weekdays each week. So if we notice down here at the bottom, here's like military time of a given day. So this is last night, for example, and then we'll notice, right, the stock chart or the future chart in this perspective keeps going, right? Usually there's like a little maintenance period per day that it turns off right after the New York session, but almost always the futures market's essentially going. And the cool part about that is there isn't technically a pre-market, right? The stock market, for example, is actually closed until 8:30 Central each day, and is actually running until a certain time each day as well. You can trade before or after pre-market or after hours in the stock market, but futures is a little bit different. So futures is 24/7 almost for those 5 days a week, and it's even open partially on Sundays as well. And one thing to be careful of, because of this like availability with futures, you might think that your strategy is kind of valid in both scenarios, pre-market and in kind of those normal trading hours during the day, but there are quite a bit of differences. So if we look at gas today, for example, I'm gonna actually get rid of these levels. When I was trading, I was actually up a little late last night. When I was trading, I noticed this gradual descent or downtrend, right? So it was making these lower lows and it was making these lower highs as well. And so essentially at that point in time, I took this trade. So when I trade trends, especially on the downside, I look for a lower high and a lower low to actually risk off of for that next pop, essentially. So when this made a lower low right here and kind of validated this lower high, I knew this was an area I could risk off of, and I actually ended up taking this trade right here for just a quick move to the downside. And it's great, you know, this trade ended up working. I made money off of it, but I did want to point out a few things, particularly that relate to the market in the early hours of a given day, or what we call pre-market. And first of all, we're going to notice it's a little bit choppy, right? So even though futures are open, we're going to notice a lot of candles end up being blank, which basically means in that minute or in that time frame, very little happened. Maybe nothing happened. And so that's one thing to consider, right? Volume is going to be really low. Another thing to consider is with that volume being low, there can be some manipulation and some really quick direction changes potentially. And today's kind of a perfect example of that. So I ended up taking this trend trade right here where I got in, I got out. I can actually show my trades in Thinkorswim to kind of show you guys how I attacked to this. And again, right when it popped up to a level that I was comfortable with risking off of, I actually entered with a stop loss right above that prior pivot or prior high, and then I've sold into the wash. So right when it did this kind of big move down, that's where I covered that short. One thing though to be careful of, and the reason I didn't try and hold to target and get greedy, is because, right, I was aware enough that I was trading in pre-market, so there is higher risk there, right? A lot of the time, pre-market, those trends aren't as strong because there's not as many people in the market. And sure enough, on this given example, right, direction did change, right? Those lower lows stopped, and then pretty quickly there, it broke out and began kind of a reversal, or even like an uptrend, you can call it. So hopefully this helps. This is something that's so important with trading pre-market, and even though you can really easily with futures and with stocks, there are a couple downsides, and hopefully this video helps with what those are. Thanks everybody.